The whole royalty industry was a very successful model, okay? But now you've got an industry that's basically cannibalizing the rest of the mining industry and the value that mining can create. Because when companies, especially little junior companies, get desperate and then they issue royalties to kind of keep the lights on, those projects are now saddled with a burden that often can't be supported. I think it's a parasitic plague on the industry. You start selling 20, 30% of your gold production at a discount, you might as well just hang up your spurs and go home.
Dr. Quinton Hennigh, world-renowned economic geologist, it's a true pleasure to host you on Palisades Gold Radio today.
Always a pleasure.
I would love to talk about underexploration for a second. We hear this time and time again that the world's simply not finding enough tier 1 deposits around the world. Name it copper, critical minerals, gold, just simply not enough of these large-scale, high-grade deposits. From your perspective, Quinton, is this simply true?
It is true. The discovery rates for almost all metals have dropped precipitously over the past decade or two. And it's shocking when you look, copper discoveries, certainly, silver discoveries. It's harder to find the data, but absolutely, good silver stories are very rare these days, new silver discoveries. But even other metals like zinc, have you heard of a zinc discovery lately? No. It's shocking. And, what's the explanation for that? I think there's a lot of explanations. The major mining companies are not self-funding exploration like they used to. It used to be exploration was driven by the major mining companies themselves. They had, very sophisticated teams and technology to go out and explore. They would make discoveries and develop mines themselves. They kind of abdicated that to the junior space about 20 years ago, 25 years ago, say. And have the juniors, have they really delivered? Not really. Okay, the money in the junior space has often been inefficient and I think has led to the deficit in discovery.
Definitely plenty of threads to pull on in the junior space, but before that, it also sounds like an interesting value proposition if there's an under-discovery in these large-scale deposits. If you might have your hands on one, that should increase the value of it, shouldn't it?
Any good discovery is going to be worth a lot of money, even in a bad market. I mean, we are in a favorable market right now. Things have definitely turned up here in the past few months, but we've been in a soft market the prior 3 or 4 years. So, but you see quality discoveries trade at a premium. A good example would be early this year. This is before the silver price really took off. Silver was kind of treading water in the mid to upper $20 range. And yet we saw aggressive pursuit of a number of silver acquisitions. Silvercrest, you also saw Gatos Silver, and then more recently Mag Silver. That was when silver had actually started to climb above 30. But the fact that the premiums on those, 1.7x, 1.9x, now for all of those acquisitions was kind of jaw-dropping. It shows what good discoveries, what good deposits can garner these days in acquisition.
And Quinton, as a follow-up question on that, I would love to hear your thoughts. What is catching your eye currently, and what type of geology is currently the interesting place to be invested in?
Yeah, look, all of the work that I've been doing lately, I've decided as I kind of get on in my career and I'm getting older, to focus more in the acquisition space, but in particular in a space where I can see a great deal of value being added through exploration. Like I'm looking at assets that have a good deal of upside. One of the best examples, San Cristobal, we being a group of private investors acquired San Cristobal from Sumitomo Corporation a few years ago. And because of the exploration upside and our pursuit subsequent to the acquisition, we've added a huge amount of value. We've added many years sulfide mine life to the existing open pit operation. We've made a new discovery. It's one of the most remarkable silver discoveries I think made in human history. And it's brand new. It's not been developed yet. But we have other projects too. We've got an oxide silver project with huge upside. Things like that I really like to dig in. So right now I'm actually pursuing a number of acquisitions. Some are within private vehicles that, similar to San Cristobal, say. Others are through public companies. I'm actually looking at one right now that I'm hoping to actually land. What am I looking for? I'm looking for things that have unrecognized exploration upside.
How do you determine what is worth your time and your capital as well? Is it a certain type of geology that attracts you? Is it high grade? What pulls you in?
It's kind of a mix of both of those, actually. I look at assets and I think, okay, is this going to be something I can add value to? Is it something that myself and my team can add a lot of value to in the short term, like in a 2-year space? Most of these acquisitions, in fact, all of them that I'm pursuing right now, are things where I can see considerable upside. A few drill holes can go a very long way. So, I'll give you an example. I'm looking at one asset which traditionally has been viewed as a modest grade, but relatively high margin zinc operation for many years. But what potential does it have? Look, I see a huge upside in terms of its potential silver endowment, and that's largely unrecognized. I also see potential on the property for a large copper endowment. What does that mean? Like a porphyry that's associated with the zinc mineralization. It's things like that where I can see going in and unlocking a discovery that the market simply has no recognition of right now. What kind of value could that return? Multiples. Like I like to see things where you get in and you can buy something for few cents on the dollar, we'll say, but you can turn it around with exploration dollars, modest spend, and you can make a discovery that delivers multiples, 10 plus returns.
Understood on that unrecognized geological potential. Talking geological types of geology, types of ore bodies, you of course have porphyry, epithermal, orogenic, Carlin type, VMS, skarns, and the list goes on and on and on. Are you preferential to certain types of geology?
I like gold. I mean, everybody knows I've been focused on gold most of my career. But more recently, I'm kind of agnostic. I got to say, I've taken the view that I like to look for any systems that are big. I've explored for Carlin systems, and I still have a passion around those. Those can be big, but is that where most of my focus is? No, I'm actually looking more at other styles of mineralization, particularly in the porphyry realm. I think most of the porphyry potential that I've been working with, when I say porphyry, I'll say porphyry / epithermal potential. It's all very large scale stuff. We got to find big deposits for the future of mining, and that's where my heart is. I'm not going after anything that's too small right now.
And why that hyper focus on big deposits?
You got to find stuff that people want to buy. It's that simple. If you focus on prizes that a large mining company is going to ultimately want to acquire, it's going to generate better returns. If you focus on small things, you're just not going to see that appetite for acquisition, and certainly not the premiums. So, it's just about as much work to go after something big as it is something small. Might as well go after something big.
Today's episode of Palisades Gold Radio is proudly brought to you by our parent company, Palisades Goldcorp, Canada's leading junior resource investment vehicle, trading on the Toronto Venture Exchange under ticker symbol PALI. With equity and warrant positions in over 200 companies, ownership of mineral projects and royalties, and a 15% stake in newfound gold, Palisades offers investors powerful, leveraged exposure to precious metals, uranium, copper, and other critical minerals. Palisade shareholders directly benefit from our team's extensive industry knowledge and access to deal flow, opportunities historically reserved for a small group of investors. To learn more, visit us at palisade.ca and join us in our mission to level the playing field for investors. Now, back to the show. The saying, of course, in the mining industry goes, the best place to look for a new mine is in the shadow of the mainframe of an old mine. Does that still hold, or is it more lucrative to go for greenfield exploration nowadays?
There is a lot of truth to that, and don't get me wrong. My main passion is greenfield exploration, but what I like to look for are assets that are in jurisdictions where there's a lot of upside in terms of exploration. So, for example, at San Cristobal, Bolivia has not been a big focus of the exploration community for many, many years. Okay, so we waltz in, and we can add a brownfield exploration, as you say, around the pit, the operating pit, no problem. We've drilled, we've found many years worth of additional sulfide reserves now, but it's the area around it, that greenfield component, that really adds intrigue. When you can march out and acquire ground and then make discoveries that, quite frankly, nobody even dreamed were possible. That's where it gets really exciting. So I like kind of that hybrid approach. I'd like to say, it's kind of like Pierre Lassonde. If you have a large land package, which I like to have, then the land itself is basically a free option on future discovery.
Optionality. So that also means that perhaps miners that have a large land package could be a very interesting place to unlock geological upside.
This is a very appropriate question, because what I see right now, because mining companies have lost their way, I'm going to say almost universally, large mining companies have lost their vision, lost their sense of internal exploration. Like, they have ability to explore, they have great land positions. Are they doing the hard work? No, they're not. They axed most of their exploration staff years ago, and they've never restaffed. They've never built up their own internal exploration. Yet they have assets and large land packages that are, in many cases, wide open, for new discovery. I have been talking to a number of large mining companies about acquiring assets they consider second tier, right or wrong. They consider second tier. It's like, well, if you don't want them, I will take them, and I'll figure out how to do something with them. I have a lot of respect for Sumitomo, but they had no appetite to spend money on exploration at San Cristobal. Recognizing that, this is a perfect example. We walk in there, and within a few months, we're drilling holes that are making new discoveries all over the place. It's that simple in many, many cases.
It sounds like the stories that you tend to involve yourself with do have a discovery in one way, shape, or form, but you're expanding that, or you're finding different mineralization than previously has been expected. How early is too early in exploration to get involved?
Well, look, if I can see compelling evidence at a greenfield level, I don't mind getting involved. Like, that's my main passion, quite frankly. But I don't want to say that I exclude anything. Okay, I look at everything across the spectrum, from greenfields to brownfields. It's got to have that exploration potential, though. Okay, so are there greenfield projects that I'm looking at that I think have that world-class potential? Absolutely. I'm looking at one right now. It's in the United States. It would be an acquisition from a company that views it as a second-tier asset. Has it really seen any significant exploration for years? No, it hasn't. I would consider it greenfields, but my view of that project and that property is it's absolutely hands down compelling, and it will deliver a world-class gold deposit, very high grades. So yes, I'm pursuing things at that end of the spectrum, greenfields, but also on the brownfields end of the spectrum too. I see a number of stories out there, like I mentioned earlier, where you got a mine it's a zinc mine that's been in place for, about 80 years almost. And it's puttered along. It's a great zinc deposit. Everybody, recognizes that it's a classic replacement zinc deposit. But do they recognize the silver and copper potential? No, but I do, and I'm very compelled. So I'm looking at things like that as well, which is really more towards the brownfield end of the spectrum. Anything that's got exploration potential, I'm in.
And talking greenfield exploration, how can you know that a project might have the potential to become a tier 1 deposit to really get this size and the grade? What information would you need to really make that judgment call?
Look, I always, any kind of asset like that, first of all, you got to make sure that the land position is commensurate with the target you're going after. I like to see projects or companies that hold projects that cover the entirety of their target, their concept. Every exploration story is really just an exercise in testing the scientific, thesis or the hypothesis, right? You're going in there and you formulate a view based on the data you have of what potential it might have. Usually, for myself, I focus on the scale of the system. Is it big? I mean, does it demonstrate compelling evidence of size? I also look at the grade. What evidence is there for grade? What examples do you have in the near area that tell you what kind of grades you might expect? Things like that. Because if you don't see a compelling case for finding the size and grade that you need to make a world-class discovery, it's not worth bothering. So those are my main criteria. It has to be in a jurisdiction though where mines have been built too. There's a lot of world-class opportunities out there that are not in locations where you want to go spend a lot of your time. Okay, so I have kind of a no-go list, but you might say, well, gee, you're in Bolivia. Bolivia has been considered a no-go list for a long time amongst most of the exploration community. In my view, it was a must-go list because it has that untapped exploration potential. So I'm not afraid of going to places, but it's really about making sure you're comfortable knowing that if you walk in there, you can make a difference. Like you know how what the playing field is and what the geology is you're trying to tackle. So
incredible. And which countries are on that Quinton's no-go list?
That are on my no-go list? Look, I think my days of working in most African jurisdictions is over. I've worked in a number of companies or countries in Africa, and at this point, I see places where you're seeing nationalization, basically, of mines and stuff. Basically, mines are getting taken away. That's not my idea of fun. Okay. Do I have fear of that in Bolivia? No, I don't. I feel quite comfortable. So I don't mind operating there. But other places that maybe are a little too close to certain other countries that, I get worried that you might be, going toe-to-toe with a political regime that might not be favorable, such as in Central Asia. I love Central Asia. The upside, absolutely amazing, okay? But do I want to go to the stands? Right now, no. I just, if you found a big copper deposit, you're landlocked. You basically have to either get the concentrates out through China, which means you have to sell to a Chinese party. That's fine. If you want to do that, great. It's not my idea of fun. Okay. So I like to operate in countries that I know you can build a mine, it won't be nationalized, and you can get your product out.
What is your idea of fun? What is on the must-go list?
Countries where there hasn't been significant exploration, countries or regions within countries that haven't seen significant exploration, particularly in recent years. Okay, where I see countries that have basically a deficit of exploration work, even though they have great potential, because we've made huge advancements in a lot of fields of exploration, geophysics, geochemistry, and other areas, just our understanding of ore deposits. And there are countries that have basically been frozen in time. For example, Japan. I think Japan is a great place to work. Most people say, gee, Japan, you really think you can build a mine there? Yes, I do. I think you can. In fact, I think that the country is becoming more and more favorable by the day to operate as a mining jurisdiction once again. Okay, Japan hasn't seen any exploration in modern history, so really since probably the late 1980s, I think is the last significant exploration in the country. That means that there's over 30 years, 35, nearly 40 years where we've learned so much more about ore deposits. And now you can go back into a country like Japan and you can kind of look at things with a new set of glasses and make discovery. And I'm doing that with the Irving Resources right now. Where else? Like Bolivia. Bolivia, because it has kind of a checkered past in terms of the ability to operate in the country, and there have been periods where things were nationalized. I think the appetite to explore Bolivia, it's kind of come and gone, and in little waves. Like there've been little waves in the late 1990s, early 2000s. Yeah, there was exploration. Then again, just a few years ago. But it's going to open up again. Okay, Argentina. That's a great example. I love Argentina. The geology is absolutely fantastic. Many regions are underexplored. That is a place where I would focus like a laser right now, and we are. I'm with Crescat and other things that I'm working on. We're actually investing in a number of stories in Argentina right now. So take me to places where there hasn't been exploration in modern history. I love them.
And we frequently hear about frontiers being opened up. For example, the Arabian-Nubian Shield that might be opened up, or the Guyana Shield. Is that of your interest?
It is, but I got to say it's extremely competitive. Okay, you might say, well, gee, a lot of people don't know the history of exploration in the Middle East. Okay, but there's been very long history of exploration in many of these jurisdictions, including Saudi Arabia. Okay, it's not like think back to the late 1800s, early 1900s. You had the British Geological Survey, the French BRGM, other groups like roaming around much of North Africa, the Middle East and stuff. And then even subsequent, like more recently, you've had the Saudis themselves doing a lot of work, and you got Ma'aden and other companies like this that have been active in Saudi Arabia for ages. Okay, and they're not dummies. They've done a lot of work, and quite frankly, I would say that they've made most of the major discoveries. So I kind of consider, it sounds surprising, but I kind of consider those areas picked over, and I'm not as interested, especially now that they've become crowded. Everybody's kind of pouring into these areas, and they're not finding, the next generation of huge deposits. Let me go somewhere where I know people haven't had that good hard look yet.
It sounds like your strategy truly revolves around being a value investor in geology, or a contrarian.
Pretty much so, yeah. Look, I'm willing to look at assets that are really unloved. I mean, just truly unloved. Why? Because if I can see something in those, if I can see a gem, in terms of its exploration upside, see some level of understanding that nobody else saw, I see those being a high value. Why? Because you can buy the asset for a discount. You can really go in there and pick up something for cheap. Am I a contrarian? I guess so. I guess more, I would say it's more of a value shopper. I really like to find things that I think are relatively cheap, but also can be a large value can be added through exploration.
I would love to talk about the state of the market for a second. I've heard you recently say there are too many juniors and too much paper being issued by these juniors. What did you mean by that?
Okay, well, because the exploration universe has kind of shifted over to the junior space, and really there have been these periods, like in say the mid 2000s, 2006, 7, 8, 9, and then again after the GFC, into 10, 11, 12. Where money just poured into the space. It really did catalyze the creation of a lot of junior companies that, quite frankly, shouldn't exist. We went from a relatively small universe, maybe a few hundred juniors, to say a universe of 3,000 plus worldwide that are out hunting for money. Most of them, I'd say, 90% of them are just lifestyle companies, or companies that lack direction. So it's goes back to what we talked about earlier. Why have we not seen the discoveries? Because a lot of that money's just been misallocated to companies that really don't have the vision, the technical people, the ability to make discoveries. There's been a lot of retreads, stories that we know in the geologic community that just shouldn't be pushed in the market, and yet they come back to life. I'll give an example. People send me stuff all the time. I get solicitations from companies that have picked up the next greatest asset, and then they show it to me, and it's Serra Pelada in Brazil. I mean, like, how many times has that thing gone around the block? I'm sick of it. we need to put a bullet in most of these junior companies, get rid of them, because all of that paper is just washing around. And most retail investors, they don't know where to go when you see this ocean of junior companies out there. Which ones are the real explorers, ones that have a shot of making discovery? It's tough to kind of find the gems, the nuggets within that large amount of sand. So I don't know. I think if we saw 50, 60, 70% of the juniors go away tomorrow, I don't think the world would be worse off for it.
Oh, right. Point well taken on there being too many juniors. Does that also mean that the market is overcapitalized, or are you also of the camp, like a lot of other people might be, that the junior market is undercapitalized as a whole?
Okay, this is going to sound double-edged, but I think mining as a whole is undercapitalized. But then when I see money come in, I see a lot of it actually go to inefficiency. So, then you could say, well, maybe it's overcapitalized. If money's coming in and chasing stupid things, and that's a worry. Well, we got a problem. Okay, the mining industry has a number of problems at very fundamental levels. First and foremost, the number of people in this space, the technical people that we have to support mining companies, is dwindling and rapidly. Okay, a lot of old guys like myself are now retiring or moving on, and there's just this huge chasm of young people. We have no young people coming into this business. Is that going to mean that we spend money more efficiently? No, it's not. I had a very interesting experience here recently where I went into a meeting that I attend quarterly. It's basically a meeting of the ICMM Council, and all of the CEOs of major mining companies attend this every 3 months. And I walk into the room, and I'm looking and thinking, there's quite a few people missing here. Barrick CEO, BHP, Rio Tinto, et cetera, et cetera. Like, there's a whole bunch of CEOs that have basically stepped out of the game here recently, or are in the process, I should say, of stepping out of the game. This is a worry. I mean, it's normal to see a changing of the guard, but in this particular case, it's almost like a vacuum. As a lot of these CEOs retire, who's going to pick up the slack? I don't know. I really don't know. Are there people? Yeah, there's probably some people out there, but we need people that are educated in and professionals in this mining industry. Whether it's engineers, geologists, somebody who's really hands-on, or metallurgists, whatever. We got to see people like that in charge of these companies to kind of right the ship here. But we don't need more accountants and lawyers. Okay, we got plenty of those, and God forbid if we got ESG types and stuff that are leading the show here, because that's going down a rabbit hole the mining industry can't support right now. But the world needs these metals. Okay, there's no question. We got to start spending money efficiently. We got to pray that the capital comes in, and that it's kind of like the old expression, please God, give me a second chance. I promise I won't screw it up. We got to take that attitude. Okay, we got to be repentant, and we got to get back in the saddle and say we're going to actually do a good job. I get worried sometimes. I really do, and especially when I see government money show up. God forbid. Oh my, government money can be misallocated. It's always bigger dollars. Like you see extra zeros on the amount of money that comes in from government, and then it gets misallocated like you wouldn't believe. Okay, that can lead to disaster. I don't like to see unsuccessful mining. I like to see successful mining ventures. So, yep, there's my soapbox for the day.
Does this also tie into permitting as well as NI 4331 and JORC compliant paperwork that just seems to become larger and larger year over year?
There's absolutely no question. We got to see permitting. We as a mining industry have to work on reducing the the burden of permitting. Okay, and we've done a terrible job of that. We tend to roll over and just go with whatever. We can't do that anymore. There's got to be a realism, a pragmatism to permitting. Otherwise, how do you make investment in an industry where it takes 10, 12, 15 years to build a mine? It's Pierre Lassonde. I love Pierre Lassonde because he always has these very clever comments. He says, calculate the NPV in a project using 8% discount when it takes 15 years to permit. What do you get? Bupkis. And that's what you get. Okay, we've got to fix that. We must fix that. Okay, what else do we need to do here? Well, look, we got to start educating people. If we don't start educating people, and I'm talking about attracting younger people into the mining industry quick. We're not going to have that next generation to build mines. A lot of people think, you got to find kids in the U.S. or in Europe or something to work their way up through university to generate these technical people. No, you don't. I'm actually sponsoring a lot of students out of Bolivia, and these kids are hungry. They want to do this work. They have absolutely jumped at the chance to come to the Colorado School of Mines and get degrees in engineering and geology and so forth. And I can see these kids are going to be the future of mining. Okay, they're the ones that are going to go out and they're going to do big things. All right. Look, I don't mean to digress too much, but what was the second part of your question just now? You asked about permitting, but what was the other part of it?
The NI 43101 compliant paperwork.
Another soapbox favorite of mine. Okay, so this, NI 43101, you got to look at the roots of it. Okay, why do we have such standards? Well, it's because of the Bre-X scandal. I mean, that's where it all initiated. Was it required prior to that? No. Were there standards? Yeah, kind of. Were they enforced? Not really. 43101. Okay, let's look at pre-43101 and post-43101. Real quick. Pre-43101, you had mining companies doing most of their exploration in-house. All right. And like I was in the gold industry, if you were in a gold mining company, your mandate was go out and find 1 million ounces, and let's build a mine. Okay, and the target was to produce 100,000 ounces per year for that deposit. Now, obviously, you want something bigger than that, but the mining company was satisfied that if you found 1 million ounces, even if it had lots of upside, that you could go out, you could drill it, you could develop it, put it in production, and then you get the cash flow. And your goal was to make money, okay? Your goal was to make money out of a discovery. And many of those mines that were found in the 80s and 90s went on to become multi-million ounce deposits, but they started at a smaller scale, okay? Now, let's fast forward. What's the goal of 43101 today? Is it to maximize the size of a discovery, through drilling ad nauseum? Well, that's kind of where we've headed with it. Unfortunately, the 43101s make the game about trying to drill out as many ounces as you can, because then, oh, look, I've got 2 million ounces and gold's trading at about, $100 an ounce in the ground right now. Therefore, I'm a $200 million market cap. It doesn't say anything about the quality of those ounces. Like, it's all distorted now, okay? The goal is not to make money out of mining. It's to make money out of making a discovery and then flogging it to somebody. That's not good. Okay, that's not good at all, because it means these junior companies they continue to raise money over and over and over again to basically fund perpetual drilling and a very slow track to advancement and cash flow. And I think that's to the detriment of the industry.
I would love to squeeze in one more question if you have the time.
Sure.
Royalty and streams, what's your take on that? Is it good for the sector?
The whole royalty industry really started, again, go right back to Pierre Lassonde. Like, if you look at Pierre Lassonde, very brilliant. I mean, listen to the story about how they found the royalty, in Goldstrike. They found it in a newspaper. I think it was Salt Lake City newspaper. But they recognized, and when they got that, and then the discovery was made, the post-Betsy discovery was made, and Meikle and so forth, and, they became a huge royalty company, huge success. Yeah, there were other royalty companies like Royal Gold started way back around that time, around the time of pipeline discovery in Nevada and stuff like this, and it was a very successful model. Okay, but now you've got an industry that's basically cannibalizing the rest of the mining industry and the value that mining can create. Okay, because when companies, especially little junior companies, get desperate, and then they issue royalties to kind of keep the lights on. Those projects are now saddled with a burden that often can't be supported. Okay, and I think people that have pursued royalties in the past, especially in robust deposits, good on them. They're very smart folks that have made a lot of money for their investors. Am I a big fan of royalty from the perspective of the mining industry? No, I think it's a parasitic, unnecessary parasitic plague on the industry, especially streaming too. I mean, my God, when you start selling 20-30% of your gold production at a discount, 20% of the spot gold price, heaven help you. You might as well just hang up your spurs and go home, because that's a waste of time. Yeah.
Dr. Quinton Hennigh, thank you so much for your time today. Please direct the viewers anywhere that you're working on right now.
As far as projects and stuff?
Sure, whatever you think that we should direct you the viewers' attention to.
Look, I'm director of a number of companies, and I'm actively in pursuit of some acquisitions. You can look through some of the companies I'm associated with. Electric metals, of all things, manganese. I've got Condor Resources. I just look at some of the companies that I'm a director of. You'll see that everything that I just talked about, my change in attitude over the past few years, is now focused in the companies that I'm helping. But then I've got private vehicles too, like San Cristobal. Absolutely delighted to be in the position we are. It's not a publicly traded stock, but I'm sorry, but we kept it all for ourselves. We're just greedy.
All right, Quinton, thank you so much for your time and insights today. I really appreciate it.
Thank you. Pleasure.
This podcast is for general information purposes only and does not constitute investment advice, an offer, or solicitation to buy or sell any securities. The views expressed are those of the host and guest and do not necessarily reflect the views of the company or their affiliates. Guests on the show are not compensated for their appearance. Certain discussions may include forward-looking statements subject to known and unknown risks and uncertainties that could cause actual results to differ materially. Listeners should do their own research, consult a licensed financial advisor, and not base any investment decisions solely on the information discussed. For a full disclaimer, please visit our website, and for full disclosure and risk factors of any companies referenced, please see full available disclosure and risk factors on their CDAR Plus at www.cdarplus.ca.